Welcome to Monday morning. Money Matters, Naples Money. It's not Money Matters, it's Naples Money Management News you can use. I've been gone for 2 weeks, so you have to bear with me here.
Happy Monday, everyone.
Happy Monday. Oh, thank goodness Marcus is here. I'm going to start with a couple of stories. I just came back from Vermont, and believe it or not, as I drove back by myself through 11 states, only one state had checkpoints coming into the state, and that was Florida.
Interesting.
Yeah, I was kind of surprised. They literally stopped every single car, asked, because I had Florida plates, so that helped, where were you coming from? Vermont, and they're like, go on. I don't know what they would have done if I said New York City. Would they have taken a picture of my plate? Or I don't know, but I thought that was pretty interesting.
That's interesting.
And my other story was, we lost a few of our good shops in our little tiny town with 2,500 people in Vermont, and the hardware store is still there. A couple of guys came in and they had worked at the hardware store in the past, but they'd been laid off from their current job. So the owner said, he's a friend of ours, and he said, hey, you guys want to come back to work? And they're like, no, you can't pay us enough. We're making too much on unemployment. So I said, I better go look this up. And I kind of checked Florida, and it doesn't look too much different. You can still make up to $1,300 a month depending on various things, but it's still only 60 to 70% of your paycheck.
Mm-hmm.
So this is all going to be interesting to see how this plays out.
Yeah, I've always wondered why a person would kind of willingly take a 40% pay cut. I mean, I guess to do nothing, but I mean, I'm not sure I could live with a 40% loss.
Well, if you did nothing, then you probably wouldn't be losing anything.
Well, fair enough, I suppose, but
anyway, the other story I wanted to tell you was we did a review Thursday of last week. And of course the markets were down, but client's portfolio for the year, the quarter, was down about 13.5%. And she had a big sigh. And then I showed her, I said, yes, but on that day, the Dow Jones was down 26%. And all of a sudden, she got all lighted and happy and whatever. And then even the better news was, for the year, we were up 0.5%. So in her case, we raced to zero.
Oh man, we made it to zero.
And we got there, but I think we've probably fallen back a little bit. It looks like that.
Unfortunately, as I'm sure many of you are aware, the last week and then today is not the best day in the market. We had a pretty bad Thursday, down 1,800 points, and then now today it's down again. We covered a little bit on Friday, a little bit of, they call that the dead cat bounce. Not a great term, but
well, tell them what it is. So that a dead cat bounce is even if you go from the Empire State Building, the tallest building, whatever. If you drop a dead cat, it will bounce.
It will bounce.
So.
And we did see that on Friday. So, but now we're down again. And that happened on June 15th was the big down day.
Today's June 15th.
What?
Oh, I apologize.
Yeah, today's June 15th.
It's Monday. This Monday's getting me.
Hey, you're getting baby brain.
I am. I'm expecting my second son soon, so if I'm a little scattered, I apologize. But so looking at why would the market be down? Well, we went really, really far, really, really fast. Between the depths of the market in March to now, we went up 30-40% in the market. And in some sectors even more, especially if you look at things like the airlines or the cruise lines. Now, why were those up? Not on any real numbers, just people had a good feeling about the economy. That with
they were so low.
And they were so low, absolutely. They were fantastic buys. But for the most part, I think a lot of people had an expectation that when these lockdowns ended, everything was going to kind of go back to normal very, very quickly. And a lot of the recent economic news is showing that while there are huge sections of the economy showing incredible strength, things like the airlines, energy, the cruise lines really don't have much of a leg to stand on right now. They're going to get there, but it was optimism that brought things up as quickly as they are. Now things are starting to kind of reality is reasserting itself. We will definitely get back there.
I should tell you though, the
Oh,
airlines
no, go ahead, please.
have not lowered their prices at all. So I just booked a flight back to Vermont right before the 4th of July, and they're still just as pricey as ever. So I will wear masks and gloves, however.
And I think that's going to hurt them. I mean, airlines are in a really odd place because they have to fly. They contract a certain number of flights regardless of how full they are, and they have to put them in the air. So obviously they negotiate their oil prices long in advance, so they are in a difficult place, especially with only showing 20 to 30% occupancy. I don't know what the future holds for the airlines.
Well, I can tell you what, there's 5 types of investors. This is one of the things that I looked at, thought it was really interesting. There's those who say, well, I own anything else but the indexes, or own just the high-tech stocks.
Mm-hmm.
And I have all kinds of stats, but we don't need to go over those. Why own anything at all, right? We have a bunch of those people.
Yeah.
And why do I own this particular thing? We get those calls on occasion, and they're good calls. You want to know why you own it, why we buy it. That's what Marcus and John and Dennis try to get everyone to understand.
And we absolutely do look forward to those calls. So if you ever have any questions about what's in your portfolio, feel free to ask me. I love talking about that.
Well, and there are 2 portfolios. Remember, Marcus is the manager also of the Smart Generation portfolio, which is up a little bit this year.
My Smart Generation portfolio, which I have talked about before, which deals very heavily in tech and really kind of like bleeding edge technology. It's up as of Thursday. It was up 37%.
Not half
This
bad.
year.
And that's really a portfolio designed for people probably under the age of 40 or
Yeah,
45-ish.
with a lot of time, because
Yeah.
these are very, very volatile. This has been a good year. I have had bad years, so.
And then the other type of investors, I wish I would have owned that. I could have made.
Oh,
And
FOMO, fear
finally,
of missing out.
yes, fear of missing out. FOMO. We don't want FOMO.
No FOMO.
And then I have no idea of what I own or why. So those are the 5 types of investors.
I like that.
And you know what? There's a lot of truth to it. Are you all set?
I am. It was great talking to you all. I will talk to you next week, provided I don't have a newborn. Have a wonderful week, and I will talk to you all soon.
Okay, and now we're going to talk with John Kincaid. He's going to do a great demonstration for us. I'm going to move my coffee cup so I don't spill it. Which doesn't mean I won't, by the way. I'm going to hold the chart, okay? Put my glasses down. I'm ready.
Okay, so
I got it.
so it's what we do is really very technical, but for a reason. And I just wanted to show you this little thing that I've been thinking about for years. For 30 years, I've looked for a portfolio like the Naples Money Managers has. That's why I'm here. And this is what I found. So we're going to ask Dawn, over on this traditional portfolio management side, we're going to ask her to draw a circle the best she can. She's human. She has a lot of market knowledge, a lot of financial planning knowledge, so she is really good. So we should expect
A big circle or a little circle? Okay, good size
diameter,
circle.
yeah. Not bad. Okay, that's a great circle. So what we want to kind of compare and contrast here is traditional portfolio management is done by a lot of different portfolio managers. They bring in their personal bias, they bring in the sectors that they like, and they highlight those in the portfolio. They allocate by traditional asset classes. All of that's good if you're 40 and 50 in a 401k and you have a lot of time. As a retiree or someone who wants to dampen volatility and increase income, we have to look for something outside of the traditional realm. And this is what we do at the Naples Money Manager. So we have an engineered portfolio, it's technical, but it's a template. It demands that the portfolio acts in certain ways outside of what we do personally, what Dennis does or our investment committee does. It adheres to the rules of a template and it delivers results. So now we're going to make a compare and contrast. I'm going to help Dawn.
Okay.
And
Come back.
I'm going to ask her, using our portfolio strategy, to trace the best she can
Okay.
around a template. Oh, I should have remembered that. So. Hang on. Okay. Now here's what I want you to look
Am I
at.
hired?
You're
Okay. I can do circles, guys. I can do circles around you.
The point here being is that you can see the template. If we were to measure from the center point of the circle geometrically, these radii would be the same mathematically. That's what the Mapato covered call does. That's what it does as an overlay. We literally overlay common stocks and we get this type of result versus when somebody takes their own personal interests or their growth skew or their value or their tech or whatever. A lot of personality goes into here and you get a lot of imperfections.
Yeah, see, I got doubled up over here and I slapped off over here, so as
Exactly.
perfect as my circle is, it's not perfect.
So that's my spot for the day. Have a great week.
What's your message though to them? Come and try perfection, or, I mean, we can't say we're perfect.
So we just took on a new client who has been in town, has a large business over about 40 years. This person comes from a very mathematical background. That's what the job demanded to get the results that his firm supplied over 40 years. He was really attracted to this because he could see that the portfolio literally demands specific parameters. There's emotional guess over here. Should we get out of the market? Should we raise more cash? This demands results for our clients, which delivers high income, double income stream, and lower volatility. 13% in your review compared to 26% in the market.
Down.
Down 13?
Yeah.
And down double that. This delivers results.
Okay, that sounds perfect. I love props and things like that. You can stay here, John, if you want to. Come on back. But I'm just going to end up the segment.
All right.
I want to thank everyone for joining us. I hope we weren't too long today, and you will forgive me because we are the Naples Money Managers, and it was having my radio show for 13 years that made me say, Naples, I don't know what I said now, Money Matters, because that was the name of the radio show. We always end by saying, money matters, but most of all, and most importantly, you matter. Take care, have a great week.